Welcome to Trade of the Day, as always brought to you by Day Trade the World. And look, there was no chance it wasn't going to be a learning experience on Snapchat, regardless of which direction you went. Down 30% on the session, wasn't quite that much at the open, but advertising under troubles, despite the fact they were able to get some beats and even had some good user numbers. It didn't matter. Those advertising concerns come to bite them in the you-know-what. So, look, I mean, the charts are only going to tell you so much here, but I will say, anytime we get a gap down this big, it's only 5% short float. And sometimes this rule, I'm going to say, applies to something which is 10, 15% short. But when you have a gap like this, a lot of times the first thought I have is, if it doesn't break the low at the open, given how far it's gone, there's always a chance for a bit of a breakout. So if you look at the actual consolidation right in here, it was like a 20-cent range it wanted to sit in with 8 at the top if you start thinking about when volume was really coming in. And it had a 760 bottom. And my first initial plan was, okay, if it holds 760 at the open and breaks out through the high, it is just go for the long, give it some room. It's going to be a big potential gap fill. And then the other direction would be, if it doesn't do that and we simply take out the low, then this thing could be at $7. So the initial trade, I was expecting not a scalp trade. That's going to be trying to hit the home run. So at the open, you can kind of see there is no real test and then bounce off the pre-market lows. It clean breaks 760 right before we're about to get that opening. So I'm into that short trade. At that point, my out is either we're going down to $7 or it's breaking 8 even. Now you can see right before the open, it actually takes out the highs. And this is like, you got to be kidding me. Like we're already breaking toward the top, but it's too early. It's not even 9:30, and I can tell you, this little wick up here, I had the level 2 up, and look, I saw it on eSignal. I see it here up at 8 even. When I was watching level 2, it terminated at about 790, and that's important in a quick second here, because I stop out inside of this channel. We're into this trade, which is like, well, if I think it's going to go down to 7 or test that 8, that's an opening trade idea, and we're now 15 minutes away from the open. So I tighten up the stop to get out of it, and then immediately go into, okay, it's strong, let's go dip buy mode. Now I have a wick bottom through that 760 level going into the open. Let's scalp it. So we grab some 760s off here, able to take a little bit out, and then into the open, we get another nice winner in front of $8 to take out this little dip buy trade. It's like, okay, we took that hit, we made that back. Now it's back to the opening thesis, which was jailbreak at $8. Does that jailbreak to you? Now, we get a break at 8. It goes to about 8.15. You're getting one out there and then slam. Now, obviously, there were some opportunities. That 770, which was a consolidation, it gives you one little scalp in there. And then that 760 level I liked, it gives you absolutely and positively nothing. It dies like a rock. But I'm still thinking if it doesn't take out the low, I'm looking for long opportunities. Bounces in front of that failed short in the pre-market. And here's the key. This is a 3-minute chart. 1, 2, 3 candles off the same low. And there was gigantic size on that 750 bid. At this point, basically having the 2 original plans going nowhere, that big size at 750 doesn't break the low, only one place to go. It is a simple day trader special. You're long at 51.52. And that's all you're looking for. In that particular case, when you're not trying to stop out for 20 or 30 cents, your stop is risking 3 cents, and you're trying to make 10, 15, you size accordingly. If you're going to risk something 30 pennies, in this case you're going to risk it 3, you should have 10 times as much. In this case, I basically do that and get it all back, and I'm all happy. It's like, I'm up on Snapchat because it only made that move, but it was such a perfect long. And then this is the best example of a learning experience and the reality of trading that you're going to see. You eventually get this breakdown at 750, which you know I'm lined up, ready for that level to break. I said the entire time after getting that long, it tests that enough and it breaks it, I'm going to be going short. The stock is 10% down, which means it's short sell restricted. You need an uptick to be able to hit the bid to go aggressively short. I put the trade in. It breaks down, goes to 99 on the bid, no fills because you need an uptick. So I get my fill on set uptick at 50, up the you-know-what, and I'm almost instantly stopped out. Tight stop because you're taking more shares in that break, thinking it's going to free fall. back in the red on Snapchat. Pretty frustrating name. And then here's the problem. It does end up working on the short side the second time through, but it's not as easy to find liquidity when it actually goes to the downside because it's SSR. Don't get the fill clean at 75 and get a partial fill down here at 46. That is part of trading life when you really want it and it's no good. You get everything you want and lose. But it's very difficult sometimes to get that fill in a short sell restricted stock. So it's frustrating for me on Snapchat. It's wins followed by losses, but there was a heck of a lot for me to learn from this one today. And as a matter of fact, what I would do in this particular situation is I would just pick either long or short and stick to that direction and not try to go to thesis and have go back and forth. As always, brought to you by Day Trader. Well, check that QR code below and get your journey started today.